10/6/2012, Saturday morning time, 10:37 a.m. Pacific Standard Time. One of the things that we're going to cover on this weekly chart is to show you where the weekly S&P bull run is. And this trailing, we had a 2-week pullback to this support level. I'll draw a trend line for the MMT here. So you can see here that as we have started out the month of October, which cannot be, in some cases, in most cases, is not always the greatest month for markets. However, we only go which way that the market is going. And right now, we're going to come up. We had a 1475 target on the S&P in the short term. We hit it. We sold out. When we broke up above this resistance level over here, where the big downtrends were on the S&P, and we've rallied up to all-time 2-calendar 12,000 highs, is that one thing I'm going to show everyone as I'm doing this analysis is on Monday, October 8th, we start off the calendar fourth quarter earnings season. Always starts with Alcoa. We're going to have Yum Brands in there. We'll be trading that one. They're affected by the Chinese slowdown economy over there. Costco, which we'll be covering, it's overbought. There are other ones that will be significant, such as J.B. Hunt in the trucking sector. Fastenal here. Winnebago Industries, we'll be looking at that and see where those sales have contracted. J.P. Morgan has ran 30% off the lows 3 times this year, or close to it from lows to highs. Wells Fargo will be up. Everyone's going to be looking at where these bankers on J.P. Morgan and Wells Fargo are. Infosystems, they missed the last quarterly earnings. The analysis that we have for this quarterly earnings report is as follows. There are going to be challenges with the earnings. Now, because we're in a big bull run, there's going to be a lot of volatility during these earnings. This is just going to be the first week of these earnings. We've already had lots of downgrades in the transportations, and other stocks have come out. CEOs are not real happy. The following week, we are going to start off with earnings such as Citigroup. We're going to have major bellwethers in here, such as Goldman Sachs. Again, another financials, and financials, they've been rallying them up in anticipation of a better economy. Apollo Group, well, that one hasn't done well, but the things that we're going to be looking at is Intel, ISRG, which we shorted the last quarter and it went down big. We're looking at that same trade to see how their European markets over there have slowed the Da Vinci sales down. The stock is still high priced relative to the growth model. The other things that we're going to be looking at here will be BlackRock, BLK. We will be taking a look at Halliburton, which has been beaten down, but what does the election have to do and how would Halliburton benefit from either one of the candidates winning? We'll be happy to update you on that one later. Northern Trust we'll be watching. There'll be other earnings in here that are of significance. Cheesecake Factory in the restaurant sector, they've done okay, but we see that they're going to have a problem. American Express, they've had a problem with the last couple of quarters. Not to mention some of the other ones, MMTs and our network worldwide, is when we start getting into some of these other companies that are of great interest to us. And I can show you right up front which one that's going to be right now. Google will be the second week. Microsoft, what is the rollout for Windows 8? SanDisk, memory flash, are they on sale? A lot of these chip stocks have come down. Economic environment and growth, Honeywell, will be watching that. The growth is going to be the key. Bottom line and top line, Capital One, COF. So as we start to go down this road of this fourth quarter earnings. There's going to be challenges, but we will tell people that the bull stayed on the sideline all during the summer rally, hates the rally because they're not in it. Um, that money will be coming off the sideline. The volatility in the price earnings is the ones that have the challenges and guide down the quarter. A lot of them that have already been guiding down. CEOs are more pessimistic than any other time. They're very uncertain. We had that big unemployment number on Friday. Even Jack Welch doesn't even believe it's true. He was the former General Electric CEO. Of course, we said that they were going to get padded before they ever did it. And look, the thing about the earnings is the big bellwethers that guide down or miss will be buyable on the dips of the quality stocks. As CSX is going to be one that we're really all over. And this is just in the first couple of weeks of the earnings season. And we will take advantage of every manipulation that may or may not happen. We believe there'll be a lot of it. United Health, UNH, people that have bought stocks for dividends. There's going to be a challenging environment in the earnings process outside of these multi-yearly highs that we're going into. And that the high frequency exchange models have driven them all the way up here. And people don't believe in the rally. It doesn't matter. The money that's on the sideline will return to the marketplace. So, what we are saying is, based on the election and based on the earnings, by calendar year end, in order for us to hit my target over here on the S&P, which we have up here, I'm going to go to the 2007 tops here. I'll just pull this part of it up. For me to get to my 1490 on the S&P, we already hit the 1475 target. So, when we take a look at what the volatility is, this is the next up move. This is where the 2007 top was in this area before the 2008 move. And we're right here where the financial crisis started on a weekly, right here. 2008, straight down it went. We have come up. We are about to break a 12-year bear. However, it's going to take a new president. It's going to take a tax plan. It's going to take getting rid of Obamacare. It's going to take a lot of things to get my S&P back up here to 1522. The top right up here is going to be 1537 and 1560, which would be a grand finale 2007 top where it all started in the financial crisis. To get up here to 1490, which is our next target right below 1500, is it's going to take a lot of people chasing performance that have been out of the market for 6 months. Fund managers, mutual fund managers, institutional managers, money managers. The dips will be bought. This is one of the best bull runs that we have seen. And it's the one that is the most hated, and it's the one with the most people on the sideline, as it is. The earnings season is going to provide opportunities to get positions. The election will have a key to getting up here. If Mr. Romney wins, we will rally. The economic data has not turned the course yet. However, markets are forward-looking in anticipation. So, in order to get the S&P up here, by year end, it's going to take people to chase these markets higher that would make it run higher. And that the support levels over here are going to be in the current level is this 10-week simple moving average within the bull trend. Once that thing crossed above that 20-week and it rises, every dip, every pullback is buyable. So, this 10-week moving average, which is right now at 13, let's just take a look and see where it is. 10-week moving average is at 1429. The neckline of the major support for this rally is going to be 1400 to 1490. If we break below 1410 and come down and test the 1400 level, there'll be a lot of stops, and it would take this a correction down to the 20 week, which is going to be about 13. Let's just say the S&P has got support down here. It's always going to be that 20 week. So stop market orders could get taken out, but the dip would be bought, and people will move in. And you have a chance, if you've been out of the rally, if you want to get trained over here, this is the place to be. That's going to be the lower support level, which would set this thing up at the 20 week to come all the way up here. And that every pullback, so if we cut through that 10 week and go down through it, there'll be a lot of selling in the short term. But the pullback to this level of where this breakout started from this major resistance handle right here. And we talked about how to get to 1475, and we did. So we're at a major support level. We're going into a major earnings. There's going to be a lot of volatility in these earnings. There's going to be a lot of people, CEOs, that remain pessimistic. They got every reason to. They don't know what taxes are going to be. They don't know what's going to happen, the fiscal cliff. You want to name it. They've got all the reason to sit on the sideline, but markets continue to go higher. Cash cannot make it in CDs and money markets. Mr. Bernanke made it clear. And I'm making it clear that you want to take the quality companies during the earnings season that either guide down or miss. That will be the buying dip opportunity if they're a leader in their individual sector and have had continuous earnings growth over the last 3 years. There is going to be a hiccup. There was in the last quarter. A lot of people missed their earnings. A lot of people missed their earnings. A lot of companies guided the quarter down so that when this quarter comes upon us as it starts Monday, that they could either meet or beat the lower growth expectations that they set in their last earnings call and the one before that last quarter. So some of it is already priced in some of the companies, and some of the companies are going to continue to mark the lower end of those earnings down, so that as we move forward in this bull rally and things do turn, they beat those estimates and markets and bull rallies continue to go higher. There'll be a lot of short-term analysis that you will want to stay in tune with. And our bigger traders around the world, to our very smallest mom and pop traders, you're all learning the same thing here. And you're all applying what you learn. And the earnings season is the greatest part of the market. Quarter after quarter after quarter, great opportunities come. You make money when they fall down, but you make money when they come back up. You make money both ways during the volatility of this earnings season and election season. And this is on the S&P 500 support level, and it's weekly little narrow range pullback to where resistance, that this support level right here is the high end of the bar, and there's the rising 10 week. They like to come down and undercut these moving averages at times, but this bull rally that's happened, every time it does, it's been popping either here at the 10 or the lower end. This is the lower support level no matter what. There's short-term support levels in there, don't get me wrong. 1425 is going to be the one that's going to be the shortest term one, right here at this trend line. For hedge fund managers and mutual fund managers, when you're viewing the video, you're going to want to know where you put that money to work, and you're going to want to pick the good high-quality companies that get that drop down either from a miss or a guidance down where they come in line, and you can move forward in your money management skills within this bull setup between now and year end. Now, we will update, should Obama win the election, what does that look like in sectors? And I can tell you, we do not need higher taxes. It's a major burden on the economy right now. France is paying 75% in taxes. Is that where the U.S. is going? Is that the model that Obama's running? Certainly, Romney doesn't want that. But you know what? You can't tax your way out of a fiscal deficit and grow the bottom base. Doesn't work. You got to grow the bottom base of the payroll base, average hourly earnings. More people have to go back to work. You build that base. Then later on down the road, you can say, okay, well, here, let's raise taxes a little bit. But if taxes don't come down to a flat tax rate, corporate America has to be competitive around the world. We need these major policy changes. We could end up having a very good bull rally moving forward if the right ingredients with the right fiscal policies made. New people in government, we hope that they would act right if they get elected. It's better than what's been dealt out for the last 4 years because people haven't gone anywhere. And I'm telling people that it's a very good possibility that we could be entering into a new bull. The last one that we entered was in 1982. And it went up until 2000 and went up 18 years. Well, we've been in the bear trend with bull rallies within the longer 12-year bear trend, and we're about to break it. And I can tell you, all of you deserve to be in here that are watching the video. And you have the right to make money. And you have a right to take advantage to make your prosperity for you better. Come and join us at stockmarketfunding.com. Whether you're just a casual investor or trader, or you're a high caliber hedge fund manager or mutual fund manager, you're welcome here. And we'll help you. We have special management systems that will guide you. Does it matter what level of people are on within the Wall Street tape? No, because everything we do is going to be the same. The only difference is the zeros behind the trades, buying the dips, buying the good quality companies. A lot of people like to put money to work in dividend yields, but let me tell you what, if your dividend gets taxed, that's not good. Because that means, once again, as far as I'm concerned, there should be no capital gains tax at all. None. Because what that does is it provides a much better sound market. And that this economy needs a few years, instead of throwing god-awful amounts of money and trying to stimulate it, let's stimulate with growth. Not monetary value. They always fail. Growth is growth. Prosperity is prosperity. Lower tax rate, good people changing things. These markets could end up treating you good. Europe is a problem. So what? U.S. is supposed to take leadership. China is weak. Spain is in a problem. We all know everything around the world. We're going to focus on corporate profits and the best of the breed. And we welcome you with us between now and calendar year end, and what 2013 will bring, and what this fourth quarter earnings will set up, and how you can cherry pick the best of the breed and make great returns. S&P 500 right now is at the wall of resistance. Support level at the 10-week. The next level that we're looking at is right below that 1500 level. And or if we break the 10-week, we would come down to the 1425 level to 1410. And ultimately, if it goes the way that market should go, it would be nice to have a great pullback, because all that money on the sideline that's underperforming will hit this market and have to put money to work. Mr. Bernanke made that clear. You want to sit in the money market? Go sit there. You want to sit in the CD? Go sit there. You're going to get yield? No. People are going to put that risk on. They're going to have to get yield. Money cannot sit on the sideline, folks. It's going to have to come back to the market.